We have Mohammad Hassan. He is head analyst, hedge funds at Eurekahedge, now joining in from Singapore. Great to have you on board, Mohammad. And going through your overall reports, can you just first up put for us the kind of numbers that we've seen in terms of the redemptions from the hedge funds, the kind of data that we've got in the month of December as well as January and Feb?
Sure. So 2018 was a very tough year for the hedge funds industry, as we have seen, and for the wider market as well, with the S&P 500 seeing substantial losses in Q4 of last year as the tech heavyweights that had been on a roller coaster ride started to pare back their gains as well. And over in Asia as well, we saw the US-China trade war boiling over and impacting the rest of the region as well. So globally, over the last 12 months, we have seen redemptions of around $140 billion from hedge funds, and most of this has been concentrated across developed markets, i.e. the US and EU. In terms of emerging Asian mandates, we recorded around $6.1 billion in net outflows. But once again, there was a silver lining over here, because our data indicates that underlying China-dedicated hedge fund managers still managed to draw in around $1 billion in inflows. And part of this reason was simply because there happened to be a lot of good high alpha managers giving exposure to greater China markets that have been around for a while, that have delivered good risk-adjusted returns, not just in 2018, but also in the worst of the markets of 2015, when we saw Chinese equities selling off massively.
Okay. Could you broadly tell us that the money which is coming out into hedge funds, is this reallocation from developed markets to emerging markets, or these are fresh inflows? In this particular case, normally towards the end of the year, we do see a bit of reallocation as well. So managers, investors will try to take out some money from their long buy strategies and go more towards market neutral kind of strategies, especially given what has been happening in the market. But in this particular case, like I've said, for the last 12 months, we have been seeing net redemption activity from hedge funds. Even in Q1 of 2019, we don't see this pressure subsiding at the moment, although our expectation is that over the coming quarter and for the rest of the year, this trend should start to return, and a lot of investors who had started piling into short-term U.S. treasuries, the kind of hedge they bet, and we saw the yield curve inverting as well. So we expect, as the risk on mode returns to the market again, some of this capital that has been withdrawn from hedge funds should start coming back into the market again.
Mohammad, what India has seen in the last 1 month has been high FII inflows, and I don't know what reasons pertain to that, but these have been the highest that we've seen in almost a gap of about 5 years. Do you sense that within emerging markets, India is now a preferred one, because all of 2018 we've actually underperformed the rest of the globe and the rest of the emerging market pack?
So India would be an interesting case over here, in the sense that we have elections coming up as well, and then we have some recent geopolitical tensions in the region as well. Over the last 12 months, however, our data does indicate that we tracked around $300 million in net flows into the Indian hedge fund industry. Now, this may not seem as a very big number, but we have to bear in mind that the Asian hedge fund industry as a whole is barely 8% of the assets of the global hedge fund industry, and we are talking about a 2.5 trillion hedge funds industry. So within that, India is an even smaller part when it comes to hedge fund managers. But yet, despite that, over the last 12 months, like I mentioned, the industry managed to attract $300 million in net capital allocations from investors. However, it is pertinent to note that over the last 3 months, we are seeing this allocation activity slow down, and it's almost flat over the last 3 months. And we wouldn't expect a much more buoyant investor sentiment over here for the moment, partly because the elections are coming up, and partly because of the Indian currency also depreciated significantly last year. And the broader expectation is that even in 2018, if Prime Minister Narendra Modi does manage to form his government, the market will more or less claw back their losses from last year, and there isn't much of an expectation of a very big rally, because some of the underlying economic numbers.
All right, Mohammad, appreciate your time. Thank you for joining us.